So today we're going to be looking at the 3 dividend stocks that I'm going to be buying over the next month. Now, a lot of this does kind of correlate with the stocks, of course, I have in my portfolio, as I don't generally add new stocks into my account. So you can see here, I have my Dividend Dentist account, which is where I house most of my focus on dividend income. Now, for me, you can see I have $17,404, and I've earned a total of $167.78 in earned dividends so far. Some of that has not been paid out yet throughout M1 Finance, but some of it will be coming as dividends do pay out. So I'm excited to kind of show you guys some of the different stocks that I'm interested in getting into. We're going to use a website called seekingalpha.com. I use this for a lot of my information as far as making sure these are companies I still want to be invested in, as well as diving a little bit deeper. So hopefully this helps you out in seeing what might be a good opportunity. Now, of course, this is all beneficial to my portfolio and my investing style because yours might be different than mine. I have, 28 holdings in this account, and not all of them will pertain to your type of investing based off of maybe your preferences or what you're looking for or your time horizon. Like, all of that has a huge impact. So when we're here in the holdings, this is the first thing I like to do when trying to make decisions. Obviously, I know the 3 that I want to be investing in, but I just kind of want to show you kind of how I think about this stuff. This is probably the first thing I do. I go to my holding section, and here on M1 Finance, which, by the way, if you are somebody who wants to utilize this platform as well with M1 Finance, I will have a link for them in the show notes down below. That does help out support the channel so I can continue to provide free content just like this for you guys. But you can get started, and I got tons of tutorials I can link you up to if you leave comments and if you have any questions. So what we're going to do is actually click on here where it says unrealized gains, and I'm going to click it a second time, and it's going to show me everything that is kind of down in my portfolio. And this will help me get a good understanding of, one, is this a company I want to keep holding on to if they're down? Because if they are down, I can do what they call dollar cost averaging, which essentially just allows me to get more value and more bang for my buck if the stock does go back up. Obviously, there's no guarantees in life, but if I believe in this company, I'm going to go ahead and buy them even when I have less value in them than when I first originally started that position. So you can see here, I have a couple companies in the negative. It doesn't always mean I'm going to be having them as the companies I'm focusing in on, because there might be different reasons for that. So you can see the 3 companies I'm negative in are DLR. So I'm down, you saw across this over here, I'm down $14.39, which is about 3.5%. I also have AT&T, which I'm down about 26% almost, which is 3%. And then I'm also down on Johnson & Johnson for exactly $1, which is 0.29 shares, or sorry, 29%. And so what this really means is that, obviously, there might be some good opportunities here. One of them is actually on this list. The other 2 are actually not. Some of the other ones on the list are a little bit further down here on the list. Now, what I want to do is kind of explain to you, one of the reasons why I add these companies. So the first one is actually going to be DLR, which is currently the lowest performing stock just from an unrealized gain position. And what we're going to do is actually come over here into the portfolio and take a look at DLR, which they are in my real estate because they are under a REIT. And you can see here DLR, and I actually have some pending trades going on for them. So to give you an example, even after all the dividends are included, I'm down about, oops, I kind of cut that off. I'm down about $11 on this fund, obviously because the dividends helped out on that. I currently have 2.90 shares, so almost 3 shares into this portfolio. My average share price is $141, and then the current stock price is $136.73. So if I buy into it right now, I am going to be dollar cost averaging, or as they say, DCA. So I do like doing that when I have an opportunity and I see it there. So let's kind of go into a little bit more of the details here. So we're going to go on to seekingalpha.com, which is this account right over here. And what you're going to see here is a lot of the same information you can find on a lot of different websites. But one of my favorite things is the dividend tabs right over here. So we're going to click on dividends, and it's going to bring up our scorecard. So this is where we're going to get a lot of our information. There's more to dive into, so always keep that in mind and do your extended research. But just from a dividend standpoint, this is what we want to look at. So you're going to see here, we got our dividends. Let me just make sure everything is clearly on screen for you guys. Okay, so we're looking good there. So our dividend yield is currently 3.28%. That's a pretty fantastic dividend yield, a little higher than some of my averages actually on my account, because I think my average is 2.28 or so. So that means an annual payout of $4.48. And because they pay out quarterly, I get $8.12 per share that I have of this company. And you saw I almost have 3 shares. Their current payout ratio is 73%, a little higher than the 60 to 65% that we would like, but because it is a REIT, it's okay to be closer to that 70-75% range. Now, their 5-year average is lower than what I would hope for when it comes to being invested into dividends. That would be terrible, by the way. But right over here, you can see it's a 5.41% growth over the last 5 years. Effectively, that is the raise that I get for having ownership in this stock. We're going to break down the last couple of upgrades that they did, or increases that they did, so that way we can see if they're kind of sticking to that 5-year average, or if maybe, it was 4 or 5 years ago that they had some really good growth. Now, they have been doing growth for 11 years, so that is a good sign. They are kind of inching closer and closer to being, a dividend aristocrat, which is paying out dividend increases for over 25 years. So as they keep getting closer and closer, that is looking really good for them. So what we're going to do here is go into the dividend news. And this is where we're going to kind of see what their last few dividend increases were. Now, back in February on the 27th, they increased their dividends by 3.7%, which is lower than their average. But I usually give a lot of companies a little bit of credit during the 2020 year because of everything that happened. This was like right when the market crashed. So maybe at that point they really already saw things coming, so they were being a lot more conservative. But if we scroll down here, we can see the year prior, also in February, they increased it by almost 7%. So this is actually above their average, which is a good sign, right? That means that they were increasing. So you can see here, they had a prior dividend of $1.01, and they jumped it up to $1.08. 7 cents is not that big of a difference, but when you consider that you're buying into these companies at certain price points, and then they are increasing their dividend without you having to do anything, and all of a sudden you're starting to make more money, 7 cents is quite a bit. I mean, heck, for 3 different stocks that I have in the company, that is going to be a healthy amount of money coming in extra that I didn't have prior that I can reinvest, and then that's how compounding really takes into effect. If we scroll down a little bit more, we could see back 2 years ago, they actually increased by 8.6%. So again, even higher than their average as well too. So we can see that 2020 was, a little bit more conservative again with everything going on. So hopefully in the future, we see them kind of jumping back up on their dividend increases. So that way our money is worth more. So I definitely see myself buying more into them this next, month, just because right now they are obviously down from their average that I purchased them at. But most likely for a lot of other people as well too. You can see that their 52-week range, lowest point was 105, which I believe was closer to during the downturn. And then their 52-week high was 165.49. So they're kind of getting close to that middle range right over there. So for me, I see this as a great opportunity to add more to my portfolio, just so that way I can continue to get more and more in there. Now, next up on this one over here as well too, we're going to hop over, and the next one is going to be Apple. So obviously Apple is a pretty large company, currently trading for $116.59. If we go back to my M1 Finance account here, Apple is actually currently my largest holding across the board over every other individual stock. So you can see here, I actually have 15 shares of Apple, average share price of $102. And since they're at 116, if I do buy more, my dollar cost average will actually go up because they're more expensive than when I paid for them, but that's totally okay. And if we go to Seeking Alpha and we go into the dividends tab over here, we're going to see some really cool information. So their yield is very low, 0.7%. I've talked about this before in previous episodes where, a lot of dividend investors are looking for like 3-4%, and I'm okay with 0.7 because I like growth as well as dividends, but then I also love dividend growth as well. This stuff is beautiful for me. So Apple on average over the last 5 years has increased by 10.5%. The last 2 or so years have not been so great, but obviously in years past we saw some really cool increases, and hopefully we get back to that position. And the reason I feel confident with that is if we look at their payout ratio, it's at 20%. Remember, our goal is usually around like 60 to 70% or even 65%. But having anything well underneath that just gives us more opportunity for them to continue to pay out dividends and then have those nice dividend increases. And they've been increasing for about 9 years, which is fantastic. If you have one full share, you are getting 82 cents a year, which breaks down to 20.5 cents every single quarter. So having 15 shares, it's a pretty decent amount, even though we're paying obviously a lot per share. That's totally okay because one, we're doing fractions, and two, this is all long-term, right? Like if you're a dividend investor, you're all in it for the long-term gains and dividends, of course, too. Of course, we can't forget the dividends. So the next one on here, let me close this off here, is going to be Lockheed Martin. And right over here you can see it's currently trading for $374. So if we go back to my portfolio, they are going to be in our industries and energy sector. And for Lockheed Martin right now, I'm just barely up right now, including the market gains and earned dividends. And we can see over here, I have 1.09 shares, so just a little bit over one share. I've paid $3.73, and with the current price, I'm barely going to increase my dollar cost average if I buy in. But obviously, because I'm so close to my dollar cost average, it's a good time for me to personally buy into it. So here in the dividends tab, we can take a look here. We have a current dividend yield of 2.78%, pretty good on par with where my portfolio stands. You can see here that the average payout, or the annual payout, I should say, sorry, is a whopping $10.40. And because they pay out quarterly, we are looking at $2.60 per quarter. Obviously, having a full share, we're pretty much getting that exactly. Now, their payout ratio is really nice. It's at 42.42%. So we have a lot of growth opportunity between that and the 60% average that we are looking for. 5-year growth rate is 10%, which is really nice. That is a good one. We're going to look in the history here to kind of look. I knew Apple already had to, not terrible, but not as great last dividend increases because I just looked at them prior to this. And then we had a dividend growth of 18 years so far. So we're inching closer and closer to a dividend aristocrat in this area. So if we click on here into the dividend news, we can see this was a very recent one in September. We actually had an 8.3% increase. Now this is lower than the average for the last 5 years, but again, considering everything in 2020, this has been a pretty good of an increase. I mean, we're going from 240 to 260 per share. That's an extra 20 cents in your pocket for every share you have. Again, getting reinvested into the market. So that 20 cents is per year, I should say. Actually, sorry, no, that 20 cents is per quarter. My bad. So that right there, if you times that by 4, that's going to be extra change in your pocket to reinvest total. So if we actually scroll down again, you can see a year ago, back in 2019, it increased by 9%, still under average, but still it went from $2.20 to $2.40. So again, another 20-cent increase. So just imagine you having this company a couple of years ago. That's 40 cents that you've increased over the last 2 years for doing nothing extra, and now that money is getting reinvested into your portfolio. It's a beautiful thing, honestly. Like just having that kind of dividend increase is fantastic. 3 years ago, they increased it by 10%. Again, another 20 cents. So that's just 60 cents over the last 3 years that you're getting extra per share per quarter. Is just going to keep piling up. And that's how compound keeps working in your favor if you are focused in on investing. If you're like me, who is focusing on growth and dividends at the same time, you're seeing a lot of this impact happen all at once for you, which is such a beautiful thing. And that's why I have these as the dividends that I'm focusing in on over the next month, over, the next 30 days. Things can change. If one of these skyrocket in price, maybe I might reconsider, or if they drop even further or any other stocks drop further, I might consider. The last one that I might do as like an extra fourth one as far as big focus is Next Era Energy. So let me actually show you what I have in Next Era Energy. So this was kind of a last second add-on here because I saw it come by when I was looking at Lockheed Martin. And part of the reason for this is that I'm barely up on it as I just recently added this to my portfolio. It's one of the newest ones I've had added in like a long time since I don't add too many. I have about 8.4 shares of this company, average share price of $74.97, and it's currently trading at 75. So just slightly over what I'm currently paying. But if we take a look at the dividends over here, right over here as the page loads up, we see the dividend yield is only 1.86%. So pretty low dividend yield, obviously, for actually a little bit lower than our average of 2.28. but the payout ratio is at a nice 61%. So it's kind of on par with what we're looking for. And because they pay out quarterly and an annual payout of $1.40, we're getting 35 cents per share on this stock over here. And you check it out, they are a dividend aristocrat, which means they've been increasing their dividends for over 25 years. So hats off to them on that end. And they have a 5-year average growth rate of 11.52%, which is what we like. We like double digits on dividend growth because that's just making our money work for us even more. So if we actually take a look at their news and see how they've increased it over time, let's go ahead and drop down here. So this was in February of 2020. So this is like right when the market was about to crash, or I think the market was crashing like on the 12th or the 16th or something like that. They increased their dividend by 12%. Imagine getting a 12% raise, just doing nothing else. So they jumped from $1.25 to $1.40 per share. Obviously, the amount of shares I have, if they do the same increase next year, that is just going to be more money in my pocket to be able to reinvest back into my portfolio. If we scroll down 2 years ago, back in 2019, they increased their dividend by 12.6%. So you see why I kind of have this idea of like why I want to add this company, DLR, Apple, and Lockheed Martin into the portfolio, because these increases, getting into these companies at these nicer prices, if the market goes back up, it's just going to mean more bang for my buck now. So that way, when they increase their dividends, I'm getting all of that for a lesser cost, which is essentially the yield on cost that most people don't really talk about, which is a big deal. Essentially, that just means that I'm getting more value now as the price increases because I don't have to pay it at that price since I bought it now. And then if they do dividend increases, my yield on cost just constantly keeps going up. And it's a beautiful thing because, again, when we see something like this at a 1.6, as a dividend investor, you might have been trained to say, that's not a good yield. I'm looking for something around 3, 4, 5% maybe. Well, those ones usually have very, very low growth rates. So you're not going to get that same value long term. It still might work out for you. I don't know that. But historically, what I like to do is look for good yields or decent yields and look for really good growth rates that have good opportunity for the value of the stock, which is obviously the price point that you pay for, also moving up too, because I like growth and I like dividend investing as well, which is why these are the companies I'm going to be buying into over the next month into my M1 Finance account. So that way I can grow this portfolio and continue to have it work for me. So that way 10, 20 years from now, probably 20 years from now, I'll be looking at making maybe $20,000 a month in dividend income. So if you want to see that happening, where in 20 years I'm making over $20,000 in dividend income, make sure you hit that subscribe button down below because I'm going to be sharing that journey with you guys so you can follow along and see that, get excited, and hopefully you continue to invest as well. Now, I want you to check out my next video right over here to keep on learning and getting excited about your investments. My name is Dennis Trufen, and I will see you guys in that next video.